G'day everybody, this is John Seville. This is your executive summary for stock setups for Wednesday. And just having a look at the market, we had a very interesting day today. Now I've been noting in Trading Room that we've been having this kind of interesting divergence in terms of how the market's been moving versus gold and oil. And obviously we've seen some peculiar movements where the gold's been going up with the market and down with the market, and oil's been going up when normally the market would be going up with it and has gone down. So we're seeing some interesting divergences. And there are some arguments, obviously, from Strath certainly believes that this has just been a rally that's been a result of a massive short covering, and that we are rallying into this 2,000 point resistance, and that this is kind of the end. Now, obviously, as I've been pointing out, we have a very large open range from the 1st of March. So we could respect open range and still be positive bias and pull all the way back to 1940 and still be closing above that range. So that's one thing to be aware of. Now, when I was starting to analyze the market tonight, I've been looking at the potential here of this upward channel, and looking at kind of this movement that's been going on here. But I redrew the trend lines tonight, just looking at the examples of rising wedges I was seeing in the market, and something else kind of jumped out to me, which was that we could also be actually forming a rising wedge, which we may very well have just broken down through today. So this was something that I really wasn't looking for, but in the essence of looking at higher probability breakdown patterns, I saw this and said, well, that is interesting. Now, we didn't have high volume. We had 4.97 billion shares yesterday and only 4.66 billion shares today. So I think it's a bit too early to say that, but just something worth pointing out. Regardless, even if we are looking at an upward channel, and again, this is about anticipating versus reacting. We're trying to look at what the possibilities are. Then the other potential is that we could be coming down into this channel and we're going to move back and forth, but at least we know where these levels may lie. Now, I think it's going to be a very interesting couple of days, but there's certainly going to be a battle between the bulls and bears coming into this market. We've got some very strong and very vacuous levels that could be filled in either direction, and obviously taking out what the futures are doing and so forth is going to be very important. Now, in Trading Room tonight, I mentioned that this is kind of the scenario where we've had a beautiful run to the upside, and I would certainly be looking at this potential area as nearing some strong resistance. 2040 certainly is that downtrend level, or close to it, as you can see from the previous highs. So this is kind of the scenario where we want to, well, at least I feel it's appropriate to start taking profit in positions that have run up close to their resistance levels or their target ones. And what I would prefer to do is reposition that capital into new trades versus going into holding older trades longer. Because I feel that very beginning of the cycle is the most probable zone for the stock to move, and where we want to be constantly moving capital back into. Once it's gone up 8-12%, take capital out, reposition, or at the very least, update the stop losses to be fairly tight to protect positions. Now, there were a couple of new ones I did want to throw by you today. Well, obviously, one was a revisit to one I talked about this morning, which is ALDW. Now, that did perform well in the market today, moved up towards its downtrend line resistance. You can see the 20-day moving average coming down. So we talked about this morning for the stock setups for Tuesday, but keep that in mind. That could have a decent rally potential if it breaks through here and move up to the kind of the top of this level, which is the high of 1363. So again, just revisiting that, reminding you of that one. Also, this was one that I found today, and it was a bit too early just to send out, but These guys was what I bought a stock position in this ahead of earnings. It was one of the few times I've ever held stock into earnings, but I did take a small position to account for the fact that there was unknown risk going into it. But so I adjusted my capital position based on what I was really willing to lose. So that was the only really reason I held into it, and just found out really that they were reporting after market at the very last second. And these guys have had a very interesting drop. Obviously down from $30. What was this? $35 down to the lows of almost $2, and have been recovering. And obviously filling the gap up to these levels, even just to this, represents about a 50% potential return. So this was one, I don't know how tradable this will be tomorrow, because their earnings were good. Well, they reported a loss, but I believe the loss was 31 cents versus the 45 cents per share that was expected. So they topped expectations, and obviously it's a thinly traded stock. That's also something to be you maybe want to be aware of. But I don't mind trading these, and something I wanted to take a punt at. So keep an eye on that in the morning, because it is thinly traded. Depends on how much attention it gets early on, but that could have a nice possible rally from 9 to 10 or 10 to 11. Certainly where I'll be looking at targeting is this level just under $11, around 10.73, or even just a little bit lower than that, just to look at these tops of these candles, kind of around that 10.30 area. But either way, this is going to be an opportunity to continue pushing the stop loss up. The only other one I wanted to mention to you this evening is SWFT, and on this one, potential option play, looking at maybe like the $16 May puts. I think they're about $1.40. It can also be a stock play as well, when the stock wants to decide to load. Now, SWFT, now it's on the screen, is one possible. Just a really short-term short. You can see we've got this beautiful kind of drop here, where we had a big flag that broke down into a descending wedge, then broke out into a rising wedge, and now seems to be dropping back again to support. So this could be an easy drop from around the $16 level. I'd be looking at a stop loss above the 9-day moving average of 16.57, and my target would be down at there's a low of 14.39. So I'd be looking at 14.44, even 14.47. But obviously, the closer you can watch that, the better exit you'll get. And that's basically it. I mean, the next couple of days are going to be very exciting. So make sure you stay tuned, and happy trading. Take care.